Thank you for joining me. I'm Alex, and I want to talk about Texas Instruments. So what they do is they make calculators, which, by the way, is not their main objective. They're a semiconductor company. They make power controllers and microcontrollers and stuff like that. So definitely not just calculators, and that's definitely not something they could live off of if that's all they did. Current price is $147, which gives them a market cap of $135 billion. Dividend yield is 2.44% with a payout ratio of 65%. Definitely not terrible, especially with current bond yields. So 2.4% is not terrible, but not really the best you can get right now. So if everything else was perfect, that would be pretty decent yield. Revenue $14.4 billion, earnings $5 billion, and the current PE is 28. Forward PE of 33 is slightly concerning, but for a company as old as Texas Instruments, I think that, with a negative growth, the PE of 33 definitely not justified, but, if everything else is perfect, we can probably overlook that. Total assets $18 billion, total liabilities $9 billion, which gives them a total stockholders' equity of $8.9 billion. And the difference there is actually less than $100 million. It's over $8.9 billion versus under $9 billion, so both just slightly low. Anyway, so the balance sheet I really like, actually. The assets to liabilities ratios is one that I really enjoy here. PE is slightly high. Revenue growth being negative is a problem for me, but it's not a lot, but still slightly concerning. Dividend yield pretty decent. Still though, obviously for a growth investor, there's negative growth, so you should not buy this company. For a dividend investor, I think that, especially with the balance sheet being what it is, the dividend yield is definitely good enough to diversify into this, but I wouldn't make it like a centerpiece of my portfolio. So definitely look into the stock if you want to diversify, especially if you want to diversify from like retailers, utilities, energy stocks, that kind of thing. It's definitely a tech company and kind of deals with the whims of that industry. So if your portfolio is already in tech companies, but you probably wouldn't be a dividend investor then. Still though, pretty decent yield. So if you're a dividend investor, definitely look into this. For a value investor, I think the PE is just slightly high, even though the dividend yield kind of sort of makes up for it, I think. So I think that despite the PE being over 20, the dividend kind of still makes it a very interesting choice for a value investor, especially with the balance sheet being what it is. The balance sheet is really nice. So this is one of those stocks where it kind of could go either way unless you're a growth investor, in which case you're out. But dividend and value investors will find some things interesting here. It just depends on how hard your limit is on the PE, basically, which is the only mildly bad stat here. Also the negative growth, but still. So I think that it's a good company. It's definitely not a bad buy. I definitely do still think that there's better companies out there for better prices. So do with that what you wish. I would definitely diversify into this if I wanted to diversify, because it's still a decent stock even at this price. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.